Hello and welcome. In this video, I'm going to discuss how Price Action Pivoter uses price action, pivot points, and Globex price points to enter trades. Let's jump right in. What I have here right in front of you is a 3-year hypothetical backtest. This covers the year 2021, the year 2022, and the year 2023. This is essentially for the SPOOs. And in this video, what I'm going to be doing also is covering a conservative setup when it comes to using price action pivoter, as well as a more moderate to liberal type setup when it comes to using price action pivoter. So what you have in front of you is what I would deem somewhere between a moderate to liberal setup, particularly when it comes to long trades. Not so when it comes to short trades. So on the long side, you'll note that the price cross long, for example, is set to 2 and the threshold long is set to 1. That's for the long trades. But for the short trades, I have it set to 8 on the price cross short, and on the threshold, I have it set to 15. So in this video, I'm going to discuss what that means. And I'm going to explain and really show you if we were to have a more conservative setup, what it would mean. So I have a conservative setup, and I'm going to do this via 8-year backtest on a conservative level. So a lot of traders tend to be, I guess, conservative. Some are more moderate to liberal, depending on your level of risk tolerance. But what I've done here is I'm going to essentially run all of these backtests concurrently while I'm recording this video. So let me go ahead and start that process now. And while the backtests are running, I'm going to go ahead and run all of these. So I'll quickly go over this so you can see the parameters. Essentially, it's 6:30 to 12:30. That's I'm at Pacific Standard Time, so that's pretty much the entire RTH session, a regular trading hour session. I do have the Globex times here for me. Of course, if you're in the Eastern Standard Time Zone, or if you're Central Time, you would change these times to reflect your session start time. Of course, the future sessions like ES and NQ, they start the day prior. For me, 3 p.m. If you're in Central Time, it'd be 5 p.m. If you're in Eastern Time, it'd be 6 p.m. So the day prior, and it goes all the way until when the session opens. So for me, that's 6:30. Pacific Standard Time would be 9:30 if you're in Eastern, it'd be 8:30 if you're in Central. I have my money management parameters set up. These are calculated on both the profit and the loss side. They're calculated when you're out of the trade, when you're flat at the close of the bar. So that's when they're calculated. Number of trades, essentially I'm looking for 1 trade. So when you're doing a conservative setup, you're looking for 1 trade a day. That's how I've done it here at least. Of course, when I say when you're looking for, it's completely up to you. Some may deem it conservative to look for 2 trades. It all depends on how you define conservative. It is subjective, it's relative, okay? I have my price target at 100 ticks. My stop is at 30 ticks. And I have my trailing peak threshold is set at 300 and 300 on the long and short side. Essentially what that means is it's going to start trailing the unrealized P&L, the unrealized peak high of the trade when it hits at least $300, and it's going to be parking itself 75% away. So let's say ultimately it triggers at 300, and then let's say now you're up hypothetically you're up $1,000 of unrealized profit. So if it's 75% away, that means it's parked it at $250 at that moment, okay? And this gets calculated every 60 seconds, I should say, recalculated every 60 seconds at the close of the bar. This strategy uses the close of the bar to do its calculations, and it is a minute bar strategy. It is the 1 minute bar. And the only way that a backtest on NinjaTrader would be accurate would be if you, in fact, traded using the minute bar and you calculated, and this is a very important and you calculated the strategy is calculating itself at the close of the bar. Okay, that's very important. Or else if you're using Renko bars, or if you're using Heikin Ashi bars, or any type of custom bar, or when you're calculating your strategy is recalculating itself not at the close of the bar, then you are essentially looking at a backtest that is useless. Okay, so remember that I do have a separate video. I'll put a link to that video in the description so you can watch that video and see the actual difference between Renko bar, Heikin Ashi bar, and minute bar, and you'll be convinced, I think, after you watch that video, that the only backtest that makes sense are in fact the minute bars that are being calculated at the close of the bar, because they have OHLC data that matches up with the data brokers. Okay, OHLC is open, high, low, and close. That's the data that every data broker stores. Okay, so that's my profit target. That's my stop. These are the trailing peak. I'm flattening everything at 12:59 my time. That's 1 minute before RTH time. So to recap on a higher level, what this means is, it means for every entry, I essentially have 4 exits. What are my exits? A profit target gets hit. That's one potential exit. Of course, we can all hope for that. My stop gets hit. We don't want that, but that is part of trading. My stop gets hit. That's my second exit. My third exit is the trailing peak threshold, where I'm parked at a percentage away from the unrealized peak high. That's my third exit. And my fourth exit is a no matter what exit, which is the 12:59. That's going to flatten everything. If I'm up, down, it's going to flatten everything at 12:59 as long as the system is connected to the internet and your computer is working, etc., etc. Okay, so those are the 4 exits. I have a tick of slippage for ES because this is for ES. I designed price action pivoter primarily for ES. The idea is we need volatility, we need volume, and we need an instrument that does observe pivot points and price action, which the futures indexes do. So this technically could work on NQ as well, because that's an index. But with NQ, you have a higher slippage, you have even higher volatility, and lower volume as far as the overall vol goes. The volume goes throughout the day. So I prefer ES. I think that when you run your back tests, you're going to see the difference between all of the instruments, but ES is what it's been designed for. Okay, so just bear that in mind. So this is 23, and I'm going to go through 22, 21, and I'm doing this just for the video's sake, so everybody has an idea of exactly what we're doing. And again, we're looking for trades Monday through Friday. I should have mentioned that as well. I mean, you see the check marks. So this is for 19, the year 2019. We have 2018, we have 2017, 2016, and 2015. Okay, so we're going back 8 years. And the reason I'm going back 8 years, that's, in my opinion, a little bit of an overkill here, but that's okay. I want to show you, if you go back 8 years, how robust this system is. Okay, so this is a conservative setup, and I'll discuss what these mean in a second here when after I load these, or excuse me, I run these. So I'm going to begin the running session for all of them while this video is being recorded, so you guys can see everything the way that it is. So I'm running all of them right now, okay? And while these guys are running, and we're going to discuss how everything works and what the idea is behind essentially what the price action is, and what the pivot points are, and how I'm looking at the Globex. Okay, so let's run this. All right. Okay, so now that they're all running, now I'm going to switch to the one that I had previously run, which had more of a moderate to liberal setup. So this actually I would consider, and the reason I'm sort of overall giving it that kind of a subjective outlook as to the style it is. So I'm saying it's moderate to liberal because this is, I would deem to be liberal. Okay, this setup, this is actually conservative, so it's somewhere in between, but because you have 4 more long trades than you have short trades, this being really conservative, so it only has 47 short trades, but it has 410 long trades, so it's obviously leaning heavily on the long side between the years of 21 and 23, and this is subjective, but I do have, as I mentioned, the setup here where it's very conservative also. So price across long is 11 and threshold is 2. So I do have the conservative on these other tabs that I'm running here, but for now let's discuss what this is. So price action, pivot points, and Globex. So let's start with this, price crosses long. So you'll notice flux pivot zone. So there are particular pivot points that this system is watching. I've programmed it so that there's particular pivot points that it's watching. And that's both regular pivots as well as Fibonacci pivots that it's watching. And if it crosses those pivots with a particular price action that I'm looking for, a particular structure of price that I'm looking for, if it crosses that pivot point twice, okay, and that's for that entire session. If it crosses it twice, and the last bar that it crosses on is higher than 1 bar ago, the high of 1 bar ago. So the low has to be higher, the close of the price has to be higher than this. Okay, so it has to be higher than 1 bar ago. That's the threshold. That's what that means on the long side. On the short side, look how I'm conservative. I'm saying I want it to cross 8 times that particular pivot point before I consider an entry on the short side. So I am being really conservative. Moreover, I'm adding to that by saying I want it to be lower than the last 15 bars. Okay, so let me retrace what I said here. So on the threshold long, I'm saying when the current price is the low of the current price is higher than the high of the last bar. That's what that means. If I said that incorrectly a second ago, I'm not going to edit this video. Just know that that's so that you know how real this video is. It's going to be raw. It's going to be real. So you can see everything the way that it is. It's not edited. There is no magic behind it. It's exactly the way that it is. Okay, there is no editing magic behind this. And so on this side, however, on the short side, 15 bars, that's a lot. So the low price of, and it's not just the low price, it's more nuanced, okay? The way I've done it is, it's the low price of all the bars, all the price that crossed the pivot points. So it's not just the last 15 bars, the low price, no. Let's say it crossed it throughout the day, throughout that session, I should say, 15 times. Each time that it crossed it, it recorded the low price of that bar that crossed it. So the system is recording it, okay? So 15 different variables have been recorded and stored. We know what the low price is of those 15 bars that crossed that pivot point. I want this high, the entry of the next trade, to be lower than the 15 bars that crossed it. The low price of the 15 bars that crossed that pivot point. So it's a very nuanced way of looking at price, okay? Moreover, I'm also studying, as I mentioned, when I say studying, observing and analyzing systematically the Globex activity. So what happened pre-market? Okay, so if anybody's not familiar with Globex, it's essentially what's happening in the pre-market. Okay, so before the session starts, there's a lot of activity. Okay, there's the overnight session. Europeans are up, Asians are up. They're trading. Okay, and so until we get to the market in the U.S., when the market opens for us, RTH open, there's plenty of trading that's happened. Obviously, not as much as when it's RTH, but there's a lot of trades, particularly an hour to an hour and a half before RTH, the RTH session starts. You have significant amount of volume there. So I do take that into consideration. Those price levels are being watched by pretty much the entire market if they know what they're doing. And so I'm watching it to ensure that we are within particular bounds. Let me put it that way, within particular constraints. Okay. And so I'm watching, the system is watching. When I say I'm the system, I'm the developer of the system. Price Action Pivoter is watching a variety of different price points in the Globex session as well. And it's considering that as a filter, if you will, before it takes a trade. Okay, so let's break down some of this analysis here. 139 trades, 183 trades, 135 trades. This is over the last 3 years, 21, 22, 23. We're almost done with 2023. It is December 1st, 2023 as I'm recording this video. Early morning hours. So this is what we've got. Let's take a look at the max drawdown. The most important number from the analysis, in my opinion, is this number. You want to be comfortable with the max drawdown. If you're not comfortable with that, then perhaps, well, there's a couple of options. You shouldn't be trading. 1. 2, you could consider trading MES, which also works on this system. So if ES if you look at these numbers and you go, well, let's just be on the safe side and add another, let's say 25% to these numbers and say, well, let's say just to round the numbers, if I'm down $3,000 or even make it worse, 3,500, am I going to be okay with that on the max drawdown? If I'm not, then perhaps trade MES, and you can add lots to that and sort of make up for it there. So you don't have to trade 10 lots of MES. You could do like maybe 3 lots of MES or 2 lots, 2 contracts, meaning you can adjust that here. And as you can see, this is one contract. All the data that the hypothetical performance that you see here is for one contract. Okay, so you can see that it's very heavy on the long side. It's very conservative on the short side. It only took 47 trades in the last 3 years, but it took 410 trades for a cumulative 457 trades during the last 3 years. So it does not trade every day. So if you're looking for a system, that trades necessarily every single day, then you'd have to make the short side conservative, liberal too. I have it very conservative. So if you made it very liberal, you're going to get a lot of trades. But here's my 2 cents on that. You don't necessarily want to trade every single day. If the setup isn't there, why force it? Is my view. Okay, that's my opinion. So you want a setup to be there. If the setup isn't there, then that's not the day to trade. That's one of the reasons. There are many reasons that, in my opinion, people should be trading via an automated system. And by the way, 80% of the market currently does. Some of those systems are horrible. Some of them are very good. But you could be away from the computer. You could be playing golf, tennis, picking up the kids, dropping the kids off, etc. And the system is on. Okay, you could watch it from your phone if you wanted to. Some of my clients, they host it on a VPS, and which is a virtual private server. There are plenty of virtual private servers that are in fact listed on NinjaTrader ecosystem. They're vendors just like I'm a vendor on the NinjaTrader ecosystem, and you can find them and you can set up an account with them. Essentially, they become now responsible for ensuring that the server is up and that you're connected via the internet, and their internet connection is very fast. And you essentially can log into your phone and just watch it, monitor it every once in a while. I do recommend that anytime you're getting near the close to be around, the flatten everything period to be around, because if your internet is not connected, it cannot flatten you. Okay, so you want to be around for that. So that's an important thing. But this is essentially what the reasoning or the setup is. It's price action, it's pivot points, and it's Globex price points. Okay, so this is the breakdown of it. The percentage that I could, or the analytics that I care the least about is this percentage win rate. In my opinion, I've seen excellent, very profitable traders that have a 27% win rate, and they're doing great, because the R ratio is highly important. Okay, your risk to reward ratio, if you've set that up right, if you have small losses but big wins, huge wins, then the win rate, it becomes a moot point. All right, I see a lot of people flexing on that, and it makes no sense to my mind. All right, it's professional traders, they don't really pay that much attention to this. Okay, obviously you don't want it to be something like 5% win rate or something like that, but it's not an important metric in my opinion. So the most important one is max drawdown. You want to look at that. Another thing to remember when it comes to the ratios, like for example the Sharpe ratio, Sortino, etc. One thing to remember is that if you don't trade or if the system doesn't trade every day, your Sharpe ratio may be impacted negatively. So it will be a lesser number. Why? Why is it like that? Well, if you just look at the notes on NinjaTrader, on their help guide, you'll find that the way that the Sharpe ratio is calculated is pretty simple, actually. It's calculated over 30 days, so a period of 30. So if your number of trades is, it's not trading every day, then that number, is going to impact the Sharpe ratio. Still, the Sharpe ratio is very good, in my opinion. The Sortino is fantastic. But these are numbers that if you were managing a portfolio, I would be paying a lot of attention to this, because you want to compare, and contrast what's going on within the portfolio. But if you're essentially trading one instrument and you're not trading that instrument every day, these numbers become skewed, okay, and negatively skewed, meaning that if it was trading every day, all things being equal, the numbers, the Sharpe ratio and the Sortino ratio, are likely to be higher than what you see here. But still, even like this, it's still good, in my opinion. And so this is the setup essentially for very, very liberal long side and a very conservative short side. But because it is generally weighted in this setup here for the long side, this is somewhere between moderate and liberal, somewhere in between there. It's not total liberal because this is really conservative on the short side, but it's somewhere in between liberal and moderate. Okay, now let's take a look at the conservative setup. It should have loaded for now. Okay, so this I've done 1 year at a time. So you're going to have to add this later in your mind or just as you watch this video. So you'll notice that it's 1 year at a time. We have 8 years to go. Essentially, you're going to have in this case, we have a lower max drawdown and you have a lower net profit. Now, here's the thing. The setup is very different. I'm making it cross 11 times on the pivot point that I'm watching, pivot points, I should say, that I'm watching, versus just twice on the last 3 years. The year 21, right here, 1121 to 12/31/2023. It's 2. On these guys, from all the analyzer tabs, from 2 all the way down to 10, they're all the same. It's 11, 2, 9, and 12. So even this is more conservative than 8, but slightly more. However, I'm balancing that by saying 12 on the threshold short side as opposed to 15. So it's a sort of a give and take, but they're all the same so that we can have an apple-to-apple comparison. You'll notice that they're all the same. I haven't changed any numbers. They are all the same, okay? So I'm going through all of them so you can see every year. All right. So this is it for 23. This is it for 22. Okay. Vast difference, right, guys? So let's just stop there and see. So for 23, we have it 69.50 on the total net profit. It took only 71 trades. Let's take a look at the analysis, break it down by the year. It took 135 trades. 135 trades this year so far versus on the conservative setup, we only have 71 trades. Okay, so bear that in mind. The win rate is going to be higher because we are, doing a conservative setup. But again, please, I don't know how else to put it, but to say pay no mind to the percent profitable. Okay, a lot of people pay attention to that. I really say, I can't stress that enough. Ignore it. Okay, you can trick this thing and make it 90% if you wanted to, if you inverted the R ratio where you took far more risk than you set out on your reward. Okay, you can have an 85-90% win rate, but so what? You may end up losing money still at the end of the year. So this is the result for 23. This is for 22. In fact, let's go back and show you 22 so that nobody says, oh, he didn't show 22. All right, so here's 22. Okay. Here is 21. All right, so 21 is not bad as far as the net profit goes. I mean, they're all not bad in my opinion, but that one's higher than the other two. So this is 20. This is 19. This is 18. Remember, 2019 is the tail of 2019 is where our problem started. Okay, with COVID. And 2020 was, what it was. Nobody wants to remember that. But anyway, I don't want to talk about that in this video. So this is 2018. 2017. That's the lowest so far. Still up, but that's the lowest. Max drawdown. It only took 52 trades, by the way. 2016. 68 trades. And 2015, 58 trades. So compare the trades being taken, going back to 2015 now, only 58 trades. There are about 250 or so trading days. So essentially it's trading, if you break it down, approximately one trade every 5 days because we've made it very, very conservative. You don't have to do that. You can make it a little bit more liberal or use sort of the philosophy of, I'm going to look at the daily chart. I'm going to look at the weekly chart. I'm going to put a little line on it and figure out if this thing is bullish or if it's bearish. If it's bullish, I'm going to be liberal on the long side. If it's bearish, I'm going to be liberal on the short side. And when I say liberal, 2-1, that would be liberal. Or even 3-1, that's still liberal. 8-15, that's very conservative. Okay? So it all depends on your style. But this is a very robust system, and it is designed, again, for particularly futures indexes, particularly the SPOOs, ES. That's what I had in mind, as that is a very popular product. You can use, of course, MES as well on this, as I mentioned earlier. So in essence, that's what I have to show for you guys. There are money management features, number of trades, consecutive loss switch. You can set your profit target, your stop. Excellent on the trailing peak. I wanted to point that out as well. So on the on the setup for 21 to 23, which I was deeming somewhere between moderate and liberal, not total liberal, not moderate, somewhere in between, you'll notice that the trailing peak threshold is going into effect when there is at least $650 of unrealized profit. That's when it triggers itself. However, conversely, on the conservative setups that I did, I said trigger yourself a trailing peak threshold at 300. Okay, so it's less than half of that. So that also plays a role. Remember, there's sort of an immutable law of trading. The higher the risk, the higher the reward. The lower the risk, the lower the reward. When I'm being more careful, I'm lowering my risk in essence by saying, hey, if I get to 300 unrealized profit, trailing peak threshold, start trailing the price from 300, okay, right off the bat, or more, right? So I'm being more conservative, meaning I'm taking less risk. Well, I should expect less reward. That's how it works in trading. If you take less risk, you should expect less reward. If you're taking more risk, you could have more reward. So it goes hand in hand. Okay, the higher the risk, the higher the reward, the lower the risk, the lower the reward. And so when it comes to the reward side, that's how you have to think about this thing. Okay, when it comes to the reward side. Doesn't mean that if you take less risk, you're definitely going to have reward. That's not what I'm saying at all, guys. Don't misinterpret and apply things to what I just said. That's not what I'm saying. What I'm saying is if you're thinking of reward, on the reward side, we're not talking about losses right now. We're talking about wins. If you're thinking about rewards, the higher the risk, the higher the potential reward. The lower the risk, the lower the potential reward. But it doesn't mean that if you take low risk, you're still going to have always reward. No. You can win or you can lose in trading. Those things have to always be the same. You could win or you can lose. It has to be equitable. That is also another immutable law. You can win or you can lose. But when it comes to setting it up, the higher the risk, the higher the reward. Lower the risk, the lower the potential reward. I should use that word, potential reward. Okay? And so this is what it is, guys. Everything has been now broken down to you. We went back 8 years. Okay? Usually on backtests, it's not necessary, in my opinion, to go back 8 years. I mean, administrations have changed. It's not the same. Lots of beautiful changes have come onto the scene, at least in my opinion. Like, for example, AI is now, like, everybody's talking about AI. That's in my opinion, a very bullish thing. So that's how I feel about it. So that opens up a whole new set of opportunities, in my opinion. Though the world is in a hot mess, as they say, but even though that it is, you see that the market is not caring at all about the world being in a hot mess, because there are a lot. I mean, besides currently inflation, they're saying is coming back down. However much emphasis you want to put onto the numbers, others are saying that there's going to be a potential reduction in interest rates and so on, and the Fed definitely is going to play a role. But a lot of people are not talking about sort of like when the internet burst onto the scene, everybody got excited, right? Because that presents a whole new set of potential opportunities, and AI is sort of the same thing except on steroids. Okay, in my opinion. where people are excited. Maybe, we don't know exactly how that's going to work out. It may not work out very well. Okay, it's possible. If you have a lot of job losses, etc., that is not bullish. But I don't think people are looking at it that way, at least not yet. I think they're looking at it as, how can this help the employees do even a better job, have even more production, and so on and so forth. I think that's right now how it's being looked at. But again, this video is being recorded on December 1st of 2023. If we fast forward to 2029 or 2030, I don't know how the world will look at AI by then. I can't, I can't see the future. I do know the past, but I can't see the future. Just the same thing when it comes to price action. We know the past. We don't know the future. So I hope this video is helpful. I hope this explains how price action works with respect to this system, and how pivot points work with respect to the system, and how I'm considering Globex price points as well in this system, how I've been conservative and liberal depending on the direction. So in the last 3 years, that's how I just set it up. I said, okay, let's do a liberal setup on the long side, a very conservative setup on the short side. These are the results. And then I said, you know what, let's just be conservative all around. This I deem to be highly conservative on both long and short, super conservative on the short side still, because remember, no matter when you look at the market, generally speaking, typically the market moves higher. So 66% of the time, approximately, the market is moving higher. Okay, sure, there are great opportunities when the market is going lower too, but that doesn't happen as often as the market is going higher. And so remember, most people want to see that, right? Most people have 401ks and IRAs, and they have, so they want the price to move higher. They want the market to move higher, not lower. And so that's how generally the markets tend to move over time, if you look at it over time. And so you definitely want to take that into consideration. And again, if you want to figure out where you are currently in the fight, if you will, you just look at a daily chart and a weekly chart. Put a little line to see where you are. Look at it. Does that look bullish to you? Does that look bearish to you? It's pretty simple. Don't add any indicators. Just look at the price. Does it move? Does it look like it's moving higher? That's bullish. If it moves like looks like it's moving lower, that's bearish. And based on that trend, you can set up a liberal setup like here, or a conservative setup like here. Okay? Pretty basic, pretty simple, very straightforward, and you can pick and choose the days you want. Some people might say, hey, I only want to trade the initial hour. Some people might say, I want to trade throughout the day. So I just set it up for the whole day. I said, look, long and short. Some people may say, look, I'm only looking for long trades. Some people may say, I'm only looking for short trades. It all depends. So I said, I made it so that it's both. Okay? If the setup is there, it's taking a trade. And those are the number of trades that it's taken. And again, it doesn't trade every single day. You see it. Okay, but it is trading when the setup is there, and to my mind, that makes more sense. Don't force it in. Okay, don't force your will onto the market. No, it's very difficult to do. Okay, it's better to just wait for the setup. Hope this video has been helpful. Until next time, take care of yourself.